Hello guys, glad to have you on board again. Today we're gonna start using the Bitcoin, and today I just changed a little something because somebody has been doing this for me and it was pretty great. So it's just basically created a Bitcoin index in which it's been pulling in all the Bitcoins from multiple exchanges regarding the volume they are plotting against the global volume. So it's pretty much interesting because, as you know, there is not just one Bitcoin. There are multiple Bitcoins, and moreover, we're also piling up the volume in here. So we'll have the real executed volume in Bitcoins, and that's interesting, though. So I'm going to, so either you put the video on hold and you just copy this, or I'll try remembering to put it down on the comment section, on the description of that video. I'm going to do it for the French users, by the way. All right, sorry about that. So that doesn't change anything in here. It's just the fact that to me the Bitcoin remains into some kind of sideways action upon the support. I still forecast another bearish drop, so we'll see if for some reasons it would be about to take down the Ethereum as well. We have multiple information suggesting this might eventually be the case. We're gonna go back in time. With this index we cannot do it, so I'm gonna return to my usual Bitcoin, which is a Bitstamp. Jesus. BTCUSD on Bitstamp. Yeah. So I'm scrolling back in time, getting back to 2014. And okay, and I've already done that job. So back then, as you can see, I've been pulling a volume profile. And what we can see is that back in 2014, what we're experiencing right now, or what I expect the Bitcoin to do, is just we'll probably just right here at the current time on the Bitcoin, waiting to have the bearish drop. So could very well happen or not happen. I really don't know. Or we could just be there in sideways action before having 2 days of total flush out. And back then they've been losing 40%. God damn it. Yes, it's actually 40%. If you take it from there to there, yes, it's a minus 40% drop. So in 2 days back then, the Bitcoin lost 40%. And we're pretty much able to do the same. So everybody who thinks that as we haven't broken down the 6,000, then Phil was wrong and we cannot go to 3,400 and things like that, that's wrong. I mean, have a look at what happened back in 2014. It happened and it wasn't a big of a deal. I mean, we were back then dropping in 2 days, but what you need to know is that what we're taking out of this is the fact that in Ethereums, we will still be ready to have an additional downside. Even though I've been already buying, we could have an additional push to the downside on Ethereums, and this is what we're going to show in here. Because generally when we have that bearish outburst, remember what the psychology must be into those into that section. The psychology must be people being despaired and surrendering the gains, which means surrendering the losses, which means stopped out. So generally, when you have a market that is stopping out users, you generally have those very bearish candles with lots of volume in them, and moreover, what you'll have is what we call a lower shadow in terms of volume. In which we just go there to trigger stop losses. No one else is trading there. It's just we trigger the stop losses, the market returns to the mean, short-term mean, and then we get the buyers to push the price higher. So the fact we didn't have such thing into Ethereums for now make me wondering if we were just at that point of Ethereum, already down. I mean, we're not going to lose another 40% drop on Ethereum. Could be, anything's possible. But if you see this, I think we're just right here working that price area on Ethereums. And back then it was the equivalent of $181. And if we were just doing this, then the lower shadow candle that's been triggering the stop losses was approximately 16% lower. So if we're still just there regarding the Ethereums, then we could just have another drop. And that wouldn't necessarily be surprising. It could be a 16% drop on Ethereum. That could be the equivalent of a minus 40% drop on Bitcoins. So once again, if you're thinking correlation and the old way fashion, It's not how it works. I mean, right now we're just into long-term territory, and what happens will stay there. I mean, it's just like that. The more you'll try to think things, the more you'll try to rationalize what's happening in there, the worst possible choices you will make. So let's say that out loud. The way it is, what happens right now is just fucking long-term trends at play. So you have to think bigger picture right now. And as I said, if you're playing out there, you cannot play with a stop loss, which means you cannot play with leverage. And you don't necessarily search to have the bottom price. You're just searching to have a decent price. I think we had decent prices already in Ethereum. So I think regarding the Bitcoin, we should have to wait to get eventually those prices. And 2014 is just once again another example that patience really is required on those markets, and that we could very well have that 40% drop in just a couple days. So if you are just too early, in a hurry buying Bitcoins because you are thinking that you will miss the shot and get into another damn fucking FOMO psychology, it's just like that. I mean, if you're buying Bitcoins right now, it might be just like another FOMO. You're buying because you're thinking it's going to go higher and you're going to miss the shot. Who cares? I mean, damn fucking wait to have interesting prices, and if you don't have them, just wait another day. And the day you got in and you get it, you just buy and then you hold. But you need to wait to get to those price areas first. Okay, that's really important to me. So I'm basically still waiting on Bitcoins to eventually get in, forecasting eventually to get the Ethereums to retrace, which means I've been taking 25% off the table on the Ethereums. As we're below that resistance, I've been taking 25% off. Okay, it's just that I keep and spare that money for an eventuality to go below $2,200 simply because because I think we still need to have that lower shadow candle. I mean, this is perfectly what I wanted. A market that is falling apart, triggering stop losses, showing some volume, but the problem is that we've made a double bottom in here, and that doesn't make sense to me. We're not supposed to make double bottom on such structure. We're supposed to make lower shadow candle, very brutal reversal, getting in there, triggering stop losses, and no one else is trading. So the price we should have in the bottom shouldn't be price that the market is trading, but should be just prices the market is taking stop losses and then brutally reversing. So I strongly think that in Ethereum, the party is not yet over. So if you haven't bought yet, buying in the resistance is nothing you can do and nothing you should do. Okay, you should eventually wait for the possibility of the market to just reverse brutally, where the Bitcoins might take a minus 40% drop. Actually, it would make a damn fucking minus 40% drop in here as well. So don't be really surprised if the prices are going below 1200, below 200. Doesn't necessarily be the end of that world. Okay, it's just once again, if you bought those prices, don't fear, just buy and damn hold. But the topic today is just for those who haven't bought and might be thinking about doing it. You're not buying below resistances. Just wait for that resistance to pop out or for the price to eventually drop down. But don't buy resistances. It's the most stupid choice you can make. I mean, if you're buying right here, why not just buying a few dollars ahead? That will be not that big of a difference, but you will not buy a resistance. Never do that. Even for a long-term call, you don't buy damn resistances. You wait for supports or eventually lower prices, or you wait for the resistance to break up. Okay, so now moving on, I've said everything I had for the cryptocurrency sector. Now we're moving out of this, trying to figure out what the damn is at play regarding the US equities, still working out this thing with the goal. As you can see, this is clearly what I was talking about, falling apart market, triggering all the stop losses. So this is clearly the scenario of a long-term reversal on the gold. So it's not something that is going to be just a pullback for a few days and then going lower. What we just done in here is finding long-term buyers of gold, and when we just and if we actually found them, and you can believe me, the reversal is not going to last a couple of weeks. It's going to last a few damn months, not to say eventually years of bullishness in the gold. It's not the bullishness because the gold bearish in the long run, but I think in here we found the long-term buyers. Now we're going to make a lower shadow candle, and then we're going to reverse and get at least there, and I think we're going to go slightly higher. But in here, once again, the gold might be sold, so you don't necessarily want to target and trigger prices to go way higher than that. It's just going to make a nice gain, pretty nice gain, then let it go. It's just cover ourselves for the potential recession with the gold. It's not going to last forever, and I would say the gold might be interesting for the first year ahead of recession, and not necessarily if we head into recession to keep it. It might just be a burst, a risk, and you want to take the gains of people buying gold at very expensive prices. So those who will be ready to buy the damn gold in here, you want to sell them your gold, and this is what I want to do. So I will first try to get there, back once again, trying to play the damn range strategy. Whenever we get there, I'll secure the trades, take fucking nice 70% drops, 70% gains and profits, and I'll probably keep 30% secured to eventually get to further prices. But I still forecast that if we do that, we'll have to do it in another way, which is an A, B, C, D, E correction, which means we have to make a triangle, and that suggests that we could have to do this. One another pullback on that trend line. As you can see, trend line testing 3 times, and if we do that, the 4th time we're going to have to break up, and we're probably going to go there. Okay, so that means wave A, consolidation, A, B, C, D, E, wave B, and terminating. It will be a very complex consolidation, but I think either way we could just go there, eventually there, but no more than that, and in here, interesting prices to sell the gold at long term. Okay, remember that the gold is a long-term bearish asset. What we've had in here clearly was overpriced. So the pullback we could make in here is just an opportunity to sell at higher prices. In the long run, you don't want to have gold in your portfolio. It's just into a mid-term perspective, let's say a 12-month. It could be interesting to have some just to sell it at better prices afterwards. But selling it will be something to do. I mean, I'm more interested in the sales I could make in there than the gains I could make up here. I will definitely take the gains out there if they are here, but what I care about is to sell the gold in here. Same thing goes for silver. Silver's been going to long-term buying entries. Don't necessarily see that price going lower, but once again, this is a buy and hold in here. I'm buying silver, I'm buying gold, but it's a buy and hold. And I'm not going to hold forever, and I invalidate in here, but as you can see, this is probably a 30% drop, and I don't see the price says doing it. If we go there, I mean that we are in fucking deep recession, and I think that recession is not going to sell the metals. Some recessions do actually sell the golds and precious metals, but generally we see a little outburst in terms of recession. Even though we might maintain a long-term bearishness, I think in terms of silver, we could very well have a little bit more potential to the bullish side, because we could go just there. That will be the minimum to me, but we could very well go up here regarding the silver. Wouldn't necessarily be surprising, and that will mean a fucking damn gain if we had to go up here. So it's still very long run to speculate. First, we'll have to find the buyers and the long-term buyers near that support. If we fail doing it, then I might have to trigger losses. For now, I'll have confidence in the year. Now regarding AUDNZD, another scenario that's working pretty well. What's happening in here, and wanted to update on this, is that we're pullbacking out of wave 1. We'll clearly see that into the 2-hour chart time frame. Okay, we got wave 1, 2 at a flat wave 2. So I was expecting wave 3 to be our extended wave, as we've made a pretty damn low retracement wave 2. I was wrong, so I didn't take any profits in here. Maybe I should have, would have allowed me to take some gains and buying again at better prices, but no problem. So the fact is that right now we might be overlapping wave 1 to 4, and I'll be searching for any bullish signal. For now we don't. We just made a double bearish signal, which means if we go there, actually I'm just going to delete that, it's not necessary anymore. So if we just go there, I'll be ready to eventually buy. Remember that breaking up a bearish signal is a potential bullish signal. We're squeezing the momentum, which means if we decide for some reasons to go upward right here, I'll be ready to put some reinforcements in there. That would be considered as a bullish signal into a technical area by just breaking up the bearish signals. But for now, I patiently wait and I expect the price to just work out that area in some kind of a neutrality, neutral oscillation, some kind of flat movement again. Doesn't know how long it will last. But what I expect in there is just to have some more oscillations then to forecast. As we just made 1, 2, 3 and wave 4 overlap suggests that right now we have only one option remaining. That's the best case scenario because I have very strong confidence that the next wave is going to be the extended wave. So we'll have a 5 sub-wave count and we'll eventually forecast us to make at least 161% of wave 3, which is right here, down to wave 4 bottom. So it's still pending, but approximately that's the minimum we should make, and that leaves us to the potential to first hit the target I was forecasting in here, which is target number 1 at 1.16, and we could eventually forecast target number 2 that is giving us a pretty damn nice cluster up here, and I think we're probably going to head toward that price. So AUDNZD might be ahead of the extended wave, so I might take additional reinforcements, not now because I think we're going to accumulate, because generally extended wave 5 have a sub wave 5 extended as well, which means if you take the subwave count 1, 2, 3, 4, 5, generally we also make the subwave 5 extended, which means we could just pair the gains, oscillate, and then bam, release all the gains at once into a very brutal movement that everyone's going to buy. Once again, just think it the way it is. My job is not to think about what the others are doing right now. My job is to think about what others will do before they even think about it, so I can act before. I'm a speculator. This is how it goes. It means that I can be wrong, can be right, you know the deal. I'm not going to tell about that once again. So the thing is that if we go upward, this is obviously where all the stupid guys will try to follow. Not the stupid guys, because that will be injury in here. It's not the way I meant that. I mean the trend followers, those who don't think the market, those who just try to follow. I'm a thinker, I'm not a follower. So I'm basically thinking that those guys who are following, they will just all trade that, which means whenever we break this, they'll get in. They'll say, okay, we break the resistance, which means we're out of that very long consolidation. So first thing first, we're going to take the bottom to the top, and we're going to extend that damn fucking range to the top, which leads me to my maximum target. So the trend followers will basically enter here, secure the gains, wait for pullbacks, and then get to the profit taking in here, which is exactly my scenario. The only difference is that I've been buying here. They will just start trading in there. And this is the price where they will get in, and where I think the market will just go straight line, and this is where I want to make maximum gains. Okay? So that being said, AUDNZD is now done. We're going to talk about NVIDIA. It's been publishing the results. It's not that good, but it's not that bad either. We're just approximately making -4 to 5%. So we're not breaking the support. We're just gapping down, which is not that big of a deal. So we'll see how it goes. It's really a binary choice. Either the market is buying it out, we are filling the gap, and we're basically neutral in between, or the market just keeps on pushing to the downside and goes to break down that support and this one and gets to validation. If we do this, I don't think it's good. Good to me, but that doesn't necessarily mean that we'll have to go fully leveraged until we get to make a close down here. I really want to see that market closing below the 14% retracement to open the prices of lower valuations and probably heading towards 38.2, which is a minimum to go out here, and probably even the 50% retracement. So right now, basically waiting to have those prices available. And right now, I think it's way too dangerous. We're still in the buyer area, which means we're gapping in here. We're still in the upper area of that trend channel, which suggests the buyers are still in control. And what we're having in here is not yet bearish. Could be bearish, but it's a little bit too soon to tell. So it's basically waiting to see how it will play out today with NVIDIA. And we'll still have that damn problem about the fact that Boeing's been bought yesterday. Highly speculative. It's like, I don't know who has been buying, but people were too afraid to sell. So yesterday was the big gainer, which just closed below the support. We just trapped another set of bears. Just once again, still same magic at play in Wall Street. This was clearly a bearish signal, and instead of keep on pushing, we said, oh shit, no, we cannot sell. Have a look at this. If we're selling for 25 additional lower percent at least, which is the worst possible scenario. We can't just do that, so we're buying. That's how we do it. I mean, it's just a speculative call in here to just push the price away from the area, but probably those who've been buying are already taking their profits. So we'll see if it has some gas to go further away, or if we're just ranging that price area to rebounds in the end. And the next rebounds to the downside is something I want to take. So right now I wait. I think the timing is not appropriate. The market doesn't want to go down. We clearly seen that the market wants to have wants to make gains, wants to keep on going to the upside. All the signs are heading the same direction. No one wants to fight it. So you just don't fight when it's not necessary. I mean, they will want to have the volatility crash down, even though it's not normal. We don't care anymore. It's like the market isn't pricing. The market is just doing what it wants, and it's not normal. But anyway, it's going to be... it's something that we'll have to pay for at some point. It's just that we might not want to pay for it right now. So it's always a matter of timing, but I think in the end everybody knows where we are heading, and it's obviously not another set of 30% higher and an extended 5 years of growth into the equities. It's more likely going to be a damn fucking recession out of fake publications, fake numbers. It's nothing like fake news and things like that. It's just like the inflation, for example, is something that we're seeking desperately. We should have signs of inflation. It's clearly there. I mean, you cannot have growth without inflation. So at some point, something is just wrong. You cannot have everything good. You cannot have growth without inflation. You cannot have things like... It's not how it works, which means at some point we might be measuring the inflation the wrong way. Something is obviously wrong with the numbers, but Wall Street is taking it for granted. Like, it's a good news, so we're not overthinking things. We take the good news, we flush the bad news, and that's how it goes. That's the trendy psychology of Wall Street, but once again, you do play trend when there is fundamental support. We don't have that. We know the economy is overheating. We know that we're having numbers that are really not real numbers, but we don't care yet. Once again, all of this will be priced at once, but the problems, when they will show up, there will just be there, and too many of them in the same time, which means we won't be able to overcome those issues because we've been fighting them for too long. That's how it goes. This is why we get into recessions, because we've been setting problems apart for too long, and when they show up and we cannot avoid them, and we have to face them, when we get there, we say, oh shit, actually that's too much. We'll have to surrender the gains, and we're going to do it all at once. That's how it goes with Wall Street. It's not the same psychology in the rest of the world. We're not doing things like that in Europe, in China, and things like that. It's not how it works. We price the risk in, you just don't. So which means if things go wrong, you'll have to double down when we'll just go down. That's how it goes, okay? So you can play that game at Wall Street for a short-term time frame, but in the end, I mean, every professional knows how it goes. It's not because Jim Cramer is putting money in, or Warren Buffett. It's not how it goes. Either way, it's a short-term scenario. If we go upward an apple, it's going to be a bubble. If we create a bubble, it's obviously going to burst. It's just a matter of time. So anyway, that being said, Apple is definitely a problem to me. So I had to spare some losses yesterday again. Been divided the position by 2 because we've been making another gap and holding it. But I think this gap is also a tinier. So these are weekly kind of time frame gap. These are just intraday gaps or daily gaps, short-term gaps. I strongly think that we've made another exhaustion in here. So we'll see how it goes. It's a breakout gap. Once again, this is a question mark. This is a question I'm wondering myself in here. I don't know what kind of gap is this. Either it's an exhaustion gap or it's another breakout gap. If it's another breakout gap, then we'll have another trend even faster than the one we had, which means we'll go probably vertical, which means we'll go in a damn bubble. So that's how it goes. I don't know, exhaustion gap or breakout gap. We'll see. If, for example, today we keep on pushing, obviously going to be a breakout gap. If we just try to push for a couple days, fake it, retrace, close the gap, will be an exhaustion gap. And if that's an exhaustion gap, means end of the trend, which means we'll go downward and we'll have to retrace and we'll have to terminate. And as we've been doing this for years, this is going to be a long-term recession. Not recession, but long-term pullback, long-term correction. Obviously going to trigger recession trades out of this, because the indices will do as well. So we'll see. Once again, highly speculative, so I'm not putting a lot of money in there, just patiently waiting for those signals to eventually confirm. But if we go there and make those exhaustion gaps, you can be sure I'll double down on Apple. I'm just patiently waiting to know what the scenario is, as I just don't for now. And once again, Warren Buffett is not a magical forecaster. He's just a guy that is managing the risks. And if it's wrong, it's going to get out pretty fast, and means it's just going to exit the trades ASAP. So we don't yet know what the price is about to do. Obviously, we think that it's going to go crazy bubble, but if that's not the case, and if that's just a dumb trading area, yes, Warren Buffett put an additional $2 billion out of the high numbers of shares of Apple it already has. So, okay, it's been pricing in, but if it has to price out, it can do it as well. Or it could have just bought in to make you buy, sell you the shit, and then basically they bought the dip, they sell you the rib, and then you go out. So we'll see how it goes. It's interesting to see how Apple will price in the next following days. Obviously, we're facing a company in here that cannot be priced that high. It really isn't worthing that much. But once again, I don't care if Wall Street want to print prices, stupid prices. It means that anyway we're going to erase all those prices at once whenever the problems will come. So just as usual, I'm closely watching for the news flow on Apple to try and find out if some clouds are piling upon our heads, because right now everybody thinks this is blue sky ahead, and I think the clouds are already forming, but I just would like them to go public. So I'm patiently waiting to see some either price action signal on Apple or bad news piling up on the news flow, but for now we've got none of those two, so I'm basically damn fucking waiting and ready to be wrong. Once again, if I'm proven wrong, I'm just gonna get out and wait for the next opportunity to get the damn short. It's just Apple has to be sold right now. It's just a matter of timing, and if you're selling and holding, you're going to suffer. So you don't sell and hold. You just sell speculatively. It doesn't work. You give away the stop loss. You wait for the next timing, and you just do it all over again. So at Wall Street, the session yesterday wasn't that great. We're already surrendering the gains. So once again, it's not that best case scenario. If you take a look at the Nasdaq, it's not bullish, nothing close to bullish. I would rather be patient in here. Today is going to be an interesting session, moreover, because we're going to play about the damn fucking weekly chart, and if we have this, oh shit, this is not good for Wall Street. So anyway, the Nasdaq, if this is closing like that, or even worse, if we're closing at the low today, no big problems ahead for next week, because that will be a weekly bearish signal, and weekly bearish signal after a damn fucking trend, which means we're going to enter into retracing that trend. This is clearly a bubble trading, so we're going to have to fuck up this at once. So which means, clearly to me, if we're wrong, we're going to make a minus 20% at least on the Nasdaq in just a couple of weeks or a few weeks. It can be pretty damn fast. This is a crashing market that might be triggering, which means damn fucking going down in a straight line. So you've been warned about this. The momentum is bearish. Everything's ready for this to happen. It's just a matter of time, and we can just try to go a little bit higher because of Apple, but cannot go that much higher than that. So it's basically a taking profit pattern. So it's not that big of a pattern. It's just short-term aggressiveness. Buyers are getting out, but we already know about that. It's just that right here we're searching for selling entries, and they might just be higher than there. So if we don't find sellers and just buyers getting out, we might just go a little bit higher and try to create a deeper bubble. But if we already find the sellers out of the taking profit pattern, the end of the world is just there. Momentum's already bearish, so at that point we just have to price it in, and anytime we just get to trigger the bearishness, everybody's going to follow. We literally have no buyers in here. It's just short-term buyers, share buybacks, and tiny speculative entries like Buffett's one and things like that. They're all ready to reverse at any point, and I think it's just we're all waiting for the signal. And so the trend followers are following the speculators are speculating, and we'll see who's right, who's wrong, but that doesn't, it is nothing I care about right now. I'm just trading, and we'll see if I'm right, if I'm wrong. It's just, the future will tell. So this is basically all I have right now. So buying the metals at the long short run, still trying to get the yields to figure out the damn problem they have. Once again, this is absolutely abnormal. We shouldn't be there with the bunds. The 10-year yields has to be there, or we're gonna have a damn fucking crash in euro area. Because of this, we're gonna have a credit crash, because if we go there, and if for some reason, we know we'll be probably there whenever the QE will end, at least there or there. So these are the targets for the 10-year yields in Germany, which means we'll have to shift the prices pretty brutally, and this is generally not good, and this can trigger credit bubble. Because the problem is not necessarily the German yields themselves. Germany is not an economy that has that much debt. But the problem is that all the other debts in euro area are kind of indexed to the German yields. It means that if the German yields are pricing in another additional 100 basis points, which means all other euro area yielding will do as well, and even more than that. So the problem is, we're all going to suffer from a very brutal reshaping of euro area debt. And if we do that, we know how it triggers. We've been making that fucking problem in 2014, 15, and it was a big problem with a crisis euro area, and that time might be 10 times bigger. So it really is one of the big problems we have in front of us. For now, the market doesn't want to care. Moreover, even worse than that, the market is going the opposite side, and it's totally abnormal, because we shouldn't be there with the bunds. We know it's going to price higher. We know it's going to be ugly. So instead of just fucking following the trends, we should think smart and think that this will have consequences, and that the consequences will not be great if we keep on doing that shit. So at some point, I'd like to see the euro yields just stop selling, or stop going to the downside, and see some tension into that market, because if we don't know now, we'll have even bigger tensions later, and that might create bubble to burst, a credit bubble to burst. So that's how it is. For now, we're just basically waiting to see how it goes. You just don't follow that damn news flow about the Turkish lira and things like that. We don't give a shit about that. It's just the headlines. The problems right now is just pricing in the US economy, and just trying to figure out if we keep on having that overpriced sectors and bubble to create in Apple, or if this is just scamming to try getting people in, and it's not going to work, and we're going to just fall apart in Apple and surrendering all the gains in the US economy at once. This is what's at play, okay? It's just basically, are we going to hold the summer a quiet summer, or are we going to have some nasty troubles that no one have priced in, which means a lot of stop losses will have to trigger at once. So this is basically the same scenario I've been showing and saying for days, and it's basically yeah, it's a binary scenario. Either we just go there and make that scenario number. It's plan A. It's plan A to me, the one I think is the most probable. Plan A, plan B, I don't really know what the market will pick. Basically a wait-and-see approach right now. So that's all I had to tell. I'm going to go back to the comment section and take your questions. So, market forecasts. And okay, feel true about the prices, all the majority of followers and speculators. In for the quick dollar, I think. Yes, once again, think quick, think short term, think stupid, and I'll get the money in the end. I don't really care about you taking mine at short term. All I care is that when you take mine, you take me $1. When I take yours, I take you $10. This is how it goes, and this is how it's always been, and it's not going to change. So 1 hour, yeah, okay, you can quit, no problem. The stock market is potential bearish, and all commodities are bearish too until stocks crash. Yes, we'll see. Yeah, but if you want to do it that way, once again, I can do this. I can just tell you what I do. I can just tell you what the trades I'll be making in a 2-minute scenario each and every day. I can just do it that way. I can go there and start the thing by telling you, okay, today I'm buying here, reinforcing here, stopping here, telling you there, and just put the stop button, hit the stop button, and just move on to something else. I think what has value in here is the process that leads me to those conclusions. If you just want a conclusion, then I think you're not in the right place. But once again, that's not to be mean to you, no problem. If you're not learning anything in here and just want to have the conclusions, then just move on to something else. Obviously, you don't have to spend an hour for this. Don't think you're a thinker, and once again, if you're thinking mining, first of all, we have to make the miners suffer. I've been warning all the miners about that. If you're mining and if you've been investing in mining, worse than that, if you've been using credit to buy stuff to mine, then you'll probably die and be into some fucking problems. Once again, if you've been investing into mining, I hope you haven't done it with leverage, not leverage, but that's the same. Using credit is like using leverage. It's spending more money than you have. So once again, I don't really give a shit about is this viable, not viable. All I think is that we're gonna make you suffer first, and we'll see afterwards. Don't think about the ETF thing. It's bullshit. It's just, once again, these are the headlines to make you talk about this. No one's caring about that. It's just short-term speculators still at play, but too risky to me to be among those, and long-term players waiting to have good prices, and they probably are just like me, waiting for better prices lower, which means I still think we're gonna go lower just for that reason. You've mentioned General Electric stock and your intention to buy it. Not just an intention, I've been buying it already. No, it's not a hedge situation. It's just I think there is an investment timing in there, and that's it's generally the fact that General Electric is the kind of asset that can be used as a safe haven into dangerous situations on the general stock market. Which means if we have to go over a sell-off, or worse than that, if we have to head toward recession in the next following month, then anyway, I think General Electric might be about to profit from this. As we've been overselling, we're basically at ground levels on General Electric. Means at some points, even speculative sellers will get out. And as we're oversold, it means that we'll have first a return to the mean. But I think in the end, it's about to be a bullish asset again, which means I think General Electric in the long run has been terminating its consolidation. I'm going to show you this in a graphic so you'll see it a little bit clearly. So if we get to the monthly chart, as you can see, this is the big leader of the S&P 500 way, and then nasty consolidation. But once again, two waves to the downside, nothing close to a crashing market, which means the value has been overpriced, but the market hasn't crashed. And this is really important, which means this asset is bullish, and which means to me we're heading toward positive cycles in there. Of course, you have to assess inflation in there, but I strongly think that we might have some higher prices, which means in the long run, we're in a monthly chart time frame, which means General Electric to me is something I want to have to invest on throughout the next economic cycle. So I'm buying in here because I think those prices are interesting, and I think in the long run, the targets are right here, approximately 40, and eventually probably a little bit higher than that, probably heading toward 50 again. $50, buying it at 12. Do you really think that's a good shot? To me, it is. It is a damn fucking good choice. So buying right here, target right here, is fucking great. I want to do it. What do I risk? Basically risking to go to zero. I don't think that asset is going to zero, but I'm doing a buy and hold in here as well. Because I think we're into, it's not the best timing to buy stocks, to be sure, okay? But once again, stocks can be bought. Into recession, some kind, a specific asset, specific sector of stocks can be bought. An energy stock like that, especially when they have been oversold, can be tried. I'd be wrong. Once again, if I'm wrong, this thing is just going to collapse and we're going to go to like a penny stock. But I don't think that's going to be the case. I think we've already terminated that nice ABC correction, and now we're heading to a long-term bullishness again on that asset. And fucking hell, I'm ready to buy in here, eyes closed. No questions asked. I can be right, I can be wrong. That's the thing for stupid traders. All I care is that right now I'm applying the strategy. I have something that says I should buy, I'm buying, no problem. I can be wrong. If I'm wrong, that's how it goes. I'm just putting a 5 to 10K in here, and if I'm wrong, I'm going to lose $5,000. Wow, that's the big of a deal. And obviously I'm not going to lose those dollars, because anyway, at some point General Electric will either die and I'll lose it entirely, but I don't think it that way. And either way, even if it dies, I don't think it will be bought by someone else's, which means I have a premium and things like that. So I'm not going to lose all that money. So the risk is not necessarily to lose it all. But I think anyway, this thing is reshaping. We're ready to go ahead into some bullishness. We've been overselling for too much, for too long. And I think at some point right now, the buyers might be at play. Okay, so that's how I see it. I could be wrong. Once again, I don't really give a shit, but I think we're probably trading at the extended, as the same price as we were back then. And would you have bought back then or not? Yes, obviously you would have bought if you knew what would have to come afterwards. My job is to forecast this, and I think we'll have something even more. As I said, I don't expect to have a 10-year economic cycle and things like that, but I think we could have some damn brutal. Take that yield. Generally, wave 3 are breaking through the wave 2 channels. So if you build that trend channel, first we'll have a target in here to secure the gains, but we're probably going to have to go higher than that. So this is the reason why I still think that we're going to do this. 1, 2, 3, 4, 5, and terminating. Okay, so this is where I want to take the profits. You can just go there to find for that resistance. I can just break out wave 3, but wave 3 is obviously going to break this, but we might just terminate a job in here and have something like that. Okay, so don't really matter how long it will take, but this is basically what I forecast for General Electric. It's going to take years to get there, but this is something definitely I want to have in my portfolio. On the long run, I'm not buying this with CFDs. I've been buying speculatively at short term for shorter term scenarios, but I've been having this in my portfolio, real portfolio. I've been buying real shares of General Electrics for that purpose. Anyway, other questions? I have to take a stop loss in gold. Can you describe what the next step will be? I'm not going to take a stop loss in gold, not now. I'm speculative, so I don't have a stop loss. I'm ready to be wrong, but I don't think it's about to be the case. If I have to, don't worry, I'm not going to hide and not going to run away from it. If I trigger a stop loss and gold, I'll tell you when and why, but now is not the timing to think about stop loss. The timing about thinking, finding the long-term buyers and fucking up the short-term speculators who've been pulling that trend for too long. They've been playing the damn stupid trend following game again, saying don't trade against the trend until it reversed. Yes, but at some point we find the long-term traders, and the long-term trends are just going to take it over. So yes, of course I'll tell you anything about the confirmation, validation. For now it's still patiently waiting to find out what the fuck is going on with Wall Street. It all depends out of this because of the damn fucking dollar. It's all about that. So right now we need to assess what the fucking dollar is doing, and at short term I still can't figure it out, so I'm patiently waiting. Okay, so bye guys, hope you learned a few things today. Once again, no magician, I could be right, I can be wrong. If you're that kind of guys who care about that, you just haven't learned the lesson yet, but you will probably at some point. So once again, don't focus on this. If you're thinking that the best traders are the ones who are right more often than they're wrong, then you're just totally wrong yourself, but you'll figure out some way later in time. Okay, so those who make the more money are those who take risks but manage those risks. Those who simply follow the trends, not asking questions, they might be taking a tiny amount of money, but it's really not something that you can make yourself a living out of unless you are a millionaire. And if you're a damn fucking billionaire, what the hell are you doing working with the markets? Just give your money to someone else to do it for you.